Good evening. And Sawan Bhai, the problem is with your name. Sawan, a delight to listen to you. We've had you welcome, greet, and cheer our speakers over the years, and it's heartening that you are here with us. A wonderful vision and perspective. In fact, while you spoke about July 1991, I was reminded, because that time AMA was not here on this premises. Yatindra Bhai will recall that we came here in 97. But 91, I think that was the budget, if I mistake not, when we had our budget meet. That is the year when I had actually, my mainstream started from 81. It was just about a decade. And 91, I had joined as the programs committee in charge. And we had our budget analysis there in Bhaikaka Bhavan. And I distinctly recall, the thrill and excitement. And therefore, since then, whenever it's a finance bill, I say there are always chills and thrills. Because the finance minister has something or the other to offer. Well, 44 years down the line, my spirits are the same. Of course, whatever transformation has taken place is here. I don't regret that, because I have so many of my other friends also whom I have been seeing over the years doing similar kheti, if I would call it. Jaju sir, Lalit bhai. So friends, let me straight away start, because today I felt, and I was right in my guess, that it is going to be a budget on which we would very much want to brainstorm with those nitty-gritties, because every budget carries its googlies, as they say, and there are a few of them. So we would like to delve deep into that. And fortunately, the way the program is structured today, I think we are going to have time to be able to take your questions, queries, and also discuss them in the fireside chat. I will focus on tax, obviously, because the economic overview has been given. Friends, let me tell you, there was a time when income tax collections were a very small, meager part of the union budget, from where the rupee comes, and then you have to really find, that in the pie, that small little fraction of income tax. And today, income tax collections, not only that they are the highest ever. In fact, in just about 4 years, the tax collection, income tax collection has doubled. The estimated budgetary collection of the current fiscal is estimated at almost 24 lakh crores. And income tax has become a very robust and healthy part of the entire budgetary revenue. So gone are those days of 97.5%, which exactly some 50 years ago, 74, we are in 24. Exactly, it's like the emergency 50 years are going to be celebrated or remembered, shortly. But I distinctly recall when I was a law student and I started, that was the time when it was 97.5. And the collection was a very small fraction. Today, the rates, and as I'll take you, The rates have liberalized to that extent. Collections have swelled. The entire mechanism of collection has become so automatic. And frankly speaking, taxpayers have no choices. Because this three-letter word, AIS and TIS, is just enough to make you alert. Because now, as they say, you should know everything that the department knows about you. Because if you don't do that, you are inviting trouble. Friends, even officers of the department, I recall, when AIS came in, they used to tell me, because I always used to plead IT for IT, and that was when information technology comes for income tax department in its true sense, it's going to bring a revolution. And we have indeed a revolution when I think how many of you, if I were to ask you, you even got your tax returns on the very same day you filed the return. In fact, there are people who got it in the very same hour they filed the tax return. So, things have moved so fast. And therefore, in this digital era, friends, now what is the focus? I want to start with the tax rates, as we always do. It's simple this time because as far as corporate rates, as far as tax rates for firms, LLPs, nothing has changed. It is all about this budget, primarily on the income tax front, is primarily about the personal taxation, and obviously, after a long time, the capital market has also been very much into the scene. So I'll start with now what we call the old versus new. It all started from 2020, and it's been now 4 years. Old, new, juni, navi. આપણે શું કહીએ કે જૂની જતી નથી ને નવી આવતી નથી. We often say this. But now it's time for the old to go and the new to really stay. Because the old is no longer gold and the new, I think, even as the finance minister herself said, almost 2/3 of the taxpayers have switched over to the new. In fact, the first 2 years, the new was virtually a debacle because there were hardly any takers for that. But with the objective of really stimulating and popularizing the new scheme, they started giving not just incentives, but I would say robust and healthy incentives. And if I have to tell you, friends, let me show this to you with a chart. Here is comparison of tax liability under the new tax regime of what we call as Section 115 BAC, and I have taken the last 3 years, including this one, 22, 23, 23, 24, 24, 25. And friends, if you take a look at this, you will see that on 15 lakhs in 22-23, you are paying a tax of 1,95,000. I have taken a non-salary taxpayer to take a very neutral view. In 23-24, in a single year, the tax was slashed by almost 39,000 rupees. And in 24-25, there has been a further reduction of over 10,000. So, in absolute terms, in 2 years, for a non-salary taxpayer, the tax relief is 49,400. And if I were to add what was given to salaried taxpayers last year under the new scheme, 50,000 rupees, and this year, another 25,000, about which we'll talk a little later. Actually, friends, in 2 years, last year and this year, the finance minister has given tax relief of 72,800 rupees to a taxpayer who is in 15 lakhs and above bracket. Never before in the history of Indian taxation or Indian budgets has such a healthy, robust relief been given. And as I will show you very shortly, friends, the tax rate as a result has gone to something which you would say is anybody's dream. Now just imagine and take a look here, tax impact for salaried SSC under the new regime. I have taken a figure of 16 lakhs, the middle class salaried man. And from in 22-23 you did not have any standard deduction, 23-24 50,000, 24-25 75,000. And keep in mind, friends, until last year standard deduction was for the old and new the same amount, 50,000. Now this budget, everything that has been given by way of a relief is only and only for the new. So you have to start forgetting the old. And this new 75,000, if you take the taxable salary after that at 1525 and take the tax payable along with the cess, the total tax on 16 lakhs, which was in 22-23, 2,26,200, which worked out to 14.14%. This time it has come to less than 10%, 9.59%. And keep this 9.59 into mind because I'm going to refer to that even a little later. Friends, we now go to another very interesting chart as to, because now people have been talking what is more beneficial. You know, we keep on getting, my friends who are in the profession, Upendra bhai, bada puche, juni ke navi? Navi rakvi? Ame navi rakvi game. But you have no choice because juni have chalvani nathi. Friends, just take a look at this. You know, there was a time when the scheme was introduced, something around 2,50,000 was the break-even point in the maximum tax slab. Now, if, you know, when this chart is only trying to show you that if we have a taxpayer who has, and again I have taken a non-salaried, if he has income of more than 15 lakhs, and you ask which tax regime is beneficial, the, you know, 2 lakhs, 2,50,000, 3 lakhs, in all these cases, even if you have deductions of all these amounts, still the tax benefit is there under new regime 62, 47, 32, 17, 10. It is only at 4,08,333 if you are able to garner deductions to that extent. So practically you would need a housing interest loan and you would need a 80C and you would need a 80D and all put together may bring you around 4 lakhs. Now there will be very few rare cases. So therefore 4,08,333 you have to keep in mind. If you are 15 lakhs and above and 4,08,333, this is it. In fact, last year what was done was even the rebate, you know, they made these two different streams. For the old, 5 lakhs was the threshold. And the rebate is only 12,500. In the new scheme, 7 lakhs and 25,000. People have been asking, rebate still continues? Of course it does. the rebate has not been disturbed, and therefore you will not pay any tax if you have regular income, not the LTCG from equity, because 112A does not get you any rebate benefit, etc. But 7 lakhs is that threshold where it's a zero tax situation. 4 lakh 8,333, remember this as a cutoff, your break-even point, and keep this in mind, because based on this, friends, now I want you to go to the next slide, because this year, as you know now, the tax rates have come from 3 to 6, 6 to 7, 7 to 9, 9 to 10, 10 to 12, 12 to 15, in 5, 10, 15, 20, 30, right? There is one more slide before I take you to this, capital gains, but on the aspect of the old versus new, friends, keep in mind, I am going to point out to you that there have been 2 very important reliefs, and that I am going to talk about. You know, the slides were mainly for those calculations or computations where looking at numbers becomes easy. Now, what are those 2 important reliefs that have been given in this budget? First is obviously the standard deduction, as you know, 25,000 higher for salaried and pensioners. And if you are in the 30% tax bracket, that makes 7,500. So 10,000 on account of rates and 7,500 for standard. So that's how the finance minister reminded you that you can take up to 17,500, right? But a very important benefit for the salaried class which has come in this budget is in regard to the NPS. Jaju Sahib, I remember just some time ago, IIM had come to me for an opinion as to whether we can get up to 14%, whether, we should be treated. And then there was this Supreme Court judgment in IIT which said that no, you are not. So everybody was feeling, why this discrimination? NPS, as you know, the new pension scheme, when the government contributes to the employee's account to 14%, that is not treated as a taxable perquisite. It is completely exempt. But when anybody in the private sector or PSU or banking, for them the limit was 10%. So this discrimination was being really criticized and also represented that it should be removed. It's a welcome provision that it has been removed this time, and now every employee across the board will be able to get this. And for salaried, garnering up their retirement benefits at a time. Let me give you a small example. Say, for example, there is an employee who is having a package of, say, 50 lakhs. Earlier, at 10%, he could get only 5 lakhs, which his employer would contribute. Now, at 14%, he would get additional 2 lakhs. So he would save an extra 60,000 rupees apart from the 17,500 that he would now. So this is, for those who are in the salaried sector, private sector, and I think more and more employers in the private sector are appreciating this, and they are trying to, give this benefit. Of course, as you know now, under the new scheme, your 80 CCD employees' contribution does not really help you. But the employer's contribution, whether it is old or new, keep in mind that the exemption to the employer's contribution very much continues. So you will get a benefit to that. There is one more welcome provision because there are very few reliefs otherwise in substantial part, and that is in respect of the abolition of angel tax. You know, the provisions of section 56, subsection 2 and clause 7b. This was a provision which came in a few years ago, and since then we've had so much of litigation because what happens, whenever there is a company, a startup, you know, startup tries to value its whatever intangibles, this, that, etc., and then it offers shares at a premium. And 5627B provided that if, you know, the shares are offered at a premium which is higher than a particular value, you know, and then very complex methods of valuation were brought in. And as a result, there is so much of litigation which is already pending. I wish, you know, for ending that litigation also an equally broad view is taken. But one good thing is 5627B from the current financial year, a sunset clause is introduced. So whether it's a startup, whether it's any other company, nobody will have to face the music of the department on the ground that you have issued shares at a value higher than, because it's always something subjective and relative, right? So these are some of the few reliefs, friends. I would now want to go to what is perhaps the most talked about, and that is capital gains. Capital gains. Friends, before I come to my case studies and talk about them, in fact, you know, I want to tell you what are the key amendments or changes that have been made. One is, of course, the finance minister said in the name of simplification, she said that we are now going to have only two holding periods. One is 12 months for equity, which will be long term. If it is more than 12 months, short term, if it is less than 12 months. And if it is other than equity, because we used to have earlier 2 years and 3 years, as you know. 2 years were for immovable property and unlisted equity, and 3 years for the remaining kind of assets. So they have now removed the 3-year block. So it is 1 year or 2 years. So 1 year is equity, 2 years is all other assets. Now, the second aspect is, you know, the finance minister's eye came in on the fact that investors were earning in the markets. And you know, markets, in fact, 4 years ago, I remember in 20 when we had COVID, the markets had gone down, bottom to as low as 20,000. And in 4 years, the Sensex has zoomed up to almost over 4 times, crossed the 80,000 mark. So the question is, well, can you really find fault with the FM if she wanted something out of your earnings, and which were earnings for which you didn't really have to sweat also? You know, the poor salaried or professional or businessman, he does sweat also. Here there is no sweat. So, you know, it's difficult to find fault with the rise in the tax. And as you know, what is the rise they have brought in? But there are other aspects. So I am not supporting absolutely what has been sought to be proposed. You know, we have 3 sections for capital gains. And I think capital gains is something most of you understand fairly well. What is the section which deals with short-term capital gains on equity shares and equity-oriented mutual funds? What is that section? 111A. That's right. And the rate under 111A used to be 15%. I said used to be because it's history now. 22nd of July was the last day when you could have thought 15%. From yesterday, it has been raised to 20%, right? 112A is another provision which we all remember, and that is long-term capital gains. Long-term capital gains, the rate was 10%, which has been raised to 12.5%. And of course, as you know, there was under proviso to 112A a provision that 1 lakh of an exemption, in the sense that if you had to pay tax, tax on up to 1 lakh was allowed as a set-off against the tax that you had to pay on your capital gains. So that 1 lakh has now been raised to 1,25,000, and this is all from yesterday itself. The third provision is 112. Now 112 is in fact the oldest provision which was there, and that is in respect of other assets. So if it is not 111A or 112A equity, then all other assets, namely unlisted equity. Of course, unlisted equity, the provision is the choice is given to the taxpayer. It is 10% without indexation or 20% with indexation, right? And all other assets, your immovable property, land, building, etc., gold, jewelry, ornaments, practically all assets which are capital assets, they are all covered under 112. Now, what has happened is, friends, just keep in mind, I want to, I'm just giving a very simple example because it doesn't need a chart also. Just try to understand the implications of these provisions. And the first provision is take short-term capital gains. And I have a fundamentally strong view on this. I think this rise from 15% to 20% is going to affect the common taxpayer quite harshly. Of course, being a true Ahmedabadi myself, and also appreciating that you are brother and sister Ahmedabadis, I am duty bound to show you the lawful way out as to how you can do it. And more so on the forum of AMA, which is my own alma mater, I think, and we'll have something very absorbing. And what I'm going to share with you, you will remember and you would want to share with all your brothers, sisters, friends, colleagues, because no media has talked about this. This is something completely thinking out of the box. But first, let me come to where the shoe pinches. We have what we call as a memorandum explaining the provisions of the finance bill. And that talks about why an amendment is brought. Right, Dinesh bhai? That's what it is. So, in this rationalization and simplification of taxation of capital gains, there are 2 lines where it is mentioned that the present rate is too low and the benefit from such low rate is flowing largely to high net worth individuals. Now, my question is, leave apart the high net worth individual, but the small man, he cannot be penalized. See, what is going to happen? Take case, there is a taxpayer, individual, who is he's just retired and enjoying his retired life with some interest in the market. And he earns, say, 10 lakhs short-term capital gains. 10 lakhs short-term capital gains. Now, as per the new rates which you saw, I just showed you in the chart, on the first 3 lakhs is zero tax. On the next 7 lakhs, which are the short-term capital gains, what will be the tax? At the rate of 20% now, it will be 1,40,000. 1,40,000 on 10 lakhs. The average rate is 14%. While the average rate which we saw in the case of even 16 lakhs income, it was 9.59%. Okay? So this 1,40,000, which used to be earlier at 15%, because that 5% means he is paying 35,000 more than what he used to pay. And it's going to pinch him. And more so, because in our, see, this 15% was introduced when? Do you remember 111A was brought in by Mr. Chidambaram in those days, when the tax rates after 5%, the next slab rate was 20, and then it was 30. At that point of time, having this 15% was just about okay. But now, until 12 lakhs, what is the slab rate on 10 to 12? It is 15%. 12 lakhs to 15 lakhs of income, the tax is 20%. And above 15 lakhs is 30%. So, when my marginal rate is also not that, here I am required to pay tax at this rate. Now what do I do? You'll remind me, Mukesh bhai, તમે promise કર્યું હતું કે અમદાવાદી વાળી ક્યાં છે અમારી વાત આપો. And the Ahmedabadi thing is, he will always want to take, not give. As they say, somebody was, drowning in the Kankaria lake, and those firefighting authorities went to save him. Alya taro hath aap. Na ape. Kem? માગીએ છે મારી પાસે, હું શું કરવા આપું? ભાઈ લે પકડ મારો હાથ. પેલા એ તરત પકડી લીધો, and he was saved, So anyway, that's in the lighter vein. But if I were smart, and I don't think any taxman would be able to do anything to me, what would I do? I would have 10 lakhs of my capital gains, 3 lakhs exempt, 7 lakhs, I don't want to pay 20%. I want to pay tax on short-term capital gains at the normal rate, because any other short-term capital gains would have attracted what? The normal rate of tax. So if I want to attract normal rate of tax, what do I do? 111A says it attracts tax of 15% or 20%. Why? Because you have paid STT. And that's why you fall under that. But suppose I do an off-market transaction, off-market, from my demat account to, say, the demat account of any of my family member or some friend. If they buy shares from me at the same market price and I do an off-market transaction, it will not fall under 111A. It will be nonetheless short-term capital gains, attracting normal rate of tax. So what will be my normal rate? On 10 lakhs, don't worry, this is not going to be plugged, it's too ingenious to be able to be tampered with. On 3 lakhs, zero tax. On the balance 7 lakhs, because 3 to 7, attracts 5%. So on 4 lakhs, it will be at 5%, 20,000. And on the remaining 3 lakhs, at 10% would be 30,000. So 20 plus 30. What tax will I pay? 50,000. This one brilliant idea of doing it smartly and thinking out of the box. And then, my family member can sell off those shares, and then the balance, gain, if at all any, they'll pay tax at whatever. Because there is no condition that you must pay STT. You can always have, as far as short term is concerned. Long term, there are certain riders because of those penny stock provisions and all that. But here, there is no embargo. So, compare 1,40,000 and 50,000. In fact, the maximum saving that you can make is if you take 12 lakhs, because that is the threshold when the rates even out. It would be 1 lakh of saving. So you can save up to 1 lakh of short-term capital gains. Frankly speaking, some solution must be found to this. And while they may want to tax those who are in the higher brackets, earning substantial gains, at a bracket of 20%, I think for the small-time investor, telling him that though up to 12 lakhs, your marginal rate cannot exceed 15%, you will have to pay tax at. It's not fair. I think this is something which really requires thinking out of the box, even on part of the FM, how they are going to resolve it. Friends, the next is, in fact, yesterday, when this provision was announced, and they said in the name of simplification, just as we are going to have only 2 holding periods, 1 year and 2 year. So they said we want, 1 rate for short term, 1 for long term. So they said long term, now we want to bring in a 12.5% rate across the board. So for 112, from 20%, they brought it down to 12.5%. The finance minister in her speech did not utter a word about what was, because otherwise it's always terms and conditions attached. So what was the T&C with this? Indexation is gone, gayab. And the moment, this was there in my lurking doubt in my mind, the moment I got the finance bill, the first thing I said, let me go and take a look at section 48. And the proviso was tampered with. So indexation gone, friends. 12.5%. Now this is frankly speaking a double-edged sword, and I am going to show you 2 case studies, which in fact today my son Jigar, in fact I borrowed from him. He put it in Ahmedabad Mirror this morning. The first case study, take situation of a property. You can take a look at the example. The fair market value as on 1/4/2001. Now, in order that there is no confusion, let me tell you, fortunately, the provision under section 49 that, you will take by way of a special cost of acquisition provision, if there is any property or any asset which is older than 2001, it will be 1/4/2000. That provision stays. Yesterday there was a lot of confusion on that, but it is not disturbed. So on 1/4/2001, 25 lakhs, the indexation, as you know, in 2001 was 100, now it is 363. So straight away that 25 lakhs gets indexed to 90 lakhs and 75,000. And if I sell the property for 1 crore, the taxable long-term gain is 9 lakhs and 25,000. And the tax on LTCG, which is 1,85,000. You are quite happy because your tax with reference to the sale consideration is less than 2%, right? Now here, just take a look, friends. 25 lakhs, because you are not getting any indexation, your taxable gain is 75 lakhs. And though from 20 it scaled down to 12.5, at 12.5 on 75 lakhs is 9 lakhs 37,500. Almost 5 times the tax that you would have otherwise paid. Now, what could be the solution to this? Take 112. 112 itself provided that without indexation it was 10% and with indexation 20%. I think in such kind of cases, the taxpayer should be given the choice. Let it be 12.5 or 20. Let it be 12.5 or 20 at the choice. 12.5 without indexation, 20 with indexation. Because there would be cases, case study 2, where you would be happy with this 12.5. Here I am taking an asset, the cost of which was 10 lakhs, and because it was acquired in, sorry, here there is a mistake. It should be, actually 1/4/2001, 10 lakhs. It is indexed to, no, it's 317. I think there is a typo, I am sorry. It should be 2021. I beg your pardon, not 2001. Cost as on 1/4/2021, based on that year of 2001 too. The index cost would be 363 into 10 divided by 317. So forget that 363 and 317, if you take that ratio, that will be exactly 1.145. So it will come to 11 lakhs and 45,000. And therefore, the sale consideration, if it is 20 lakhs, your taxable LTCG is 855, tax would be 171. Comparing it with 12.5, it is 120. Now here, I want to make an observation. This morning in the papers, you must have read, the finance secretary is saying that 95% of the cases are going to benefit because of this 12.5%. With utmost respect, I beg to disagree, because in case most of the cases of property transactions, I think this is going to be a very hurting provision, and therefore the finance minister herself in the interview said yesterday that the object was not to raise revenue. So if that is so, then, indexation, why is it being, who brought in indexation, friends, historically? In 91, the credit for bringing in indexation should go to Dr. Manmohan Singh, 91-92. Because he said, as an economist, he realized that when you are talking of, take this example, the earlier case that I gave you, in 2001, what you could get for 25 lakhs, the same apartment, if you had to get it today, it would probably cost you 1.5 to 2 crores. Yes or no? Yes. So, the value of the rupee has fallen such. And, in that situation, the only comfort that you can get in terms of capital gain is indexation. And in so many global economies, you have this. In fact, in UK, let me tell you, the exemption limit is linked with the cost of living index. So, every year they say the basic exemption limit will automatically be raised up. So, this is something, it's a fundamentally economic. And then, what hurts is, when bureaucrats write like this, just imagine, what is the justification they gave? They said, simultaneously with rationalization of rate to 12.5, indexation is proposed to be removed for calculation of any long-term capital gains, etc., this will ease computation of capital gains for the taxpayer and the tax administration. What are you talking? What are you talking? આપણે શુદ્ધ ગુજરાતીમાં મશ્કરી કરો છો? કોની મશ્કરી કરો છો તમે? You know what has been going on from 91 until now, and it has been rationalized. I remember when I was part of the Ishwar committee and we went to Jetli ji, and you know this, earlier it was 1981 if you recall. Then it was brought to 1/4/2001. You know, all these, in the name of simplicity and rationalization, if you are trying to bring in such, you know, iniquitous and harsh provisions, I think at least refrain from doing that. And this 95% is something which cannot be accepted, friends. Okay, on the sidelines, I would like to mention that, you know, if we take a look at gold, you know, I think that's all about slides, you know, then I'll be running through the provisions quickly. Gold is interesting because, you know, remember this, on 1st April 2001, guess what was the price of gold? 4,190 per 10 grams. Anybody sitting here who got married early in the 1970s? Raise your hand. 1970s. Yes. What was the price of gold? Huh? Ketla? Na, એ તો વધારે છે. It was 100 rupees. 100 rupees per 10 grams. 75 માં પછી બધા હું early 70s કહું છું તમને. So, you know, the gold, and today, gold, of course, it went up and then came down. But yesterday, the gold price was 72,210. By indexation, the gold price would be 15,209. Now, in this case, you would marginally be saving some tax because, you know, until this, you know, amendment came in, you were paying 11,400, now you are going to pay. So actually, you know, this 12.5, it's difficult to say or make a bland statement that it's going to help or hurt. It all depends on the facts of each case, but keep in mind that there are going to be situations where it's going to be tough. This budget has hit, you know, what was almost the darling of the stock market, buyback of shares. But then, you know, as it often happens, the FM has told you કે ભાઈ હજી કઈ વાંધો નહીં, 2 મહિના ઉપરનો time છે. Because this provision, friends, is going to be amended only from 1st of October. So you will find, buyback no હજી તો મુશળધાર વરસાદ આવશે. અહીં વરસાદ અટકી જશે ને સાવન તો પણ. Because this is the last time opportunity. And you know, when you talk of it, why not? Because most of the promoters are paying tax on dividend in the bracket of, with surcharge, 39%. And this buyback tax on distributed income is 23.296. So there is an arbitrage of almost over 15%. Well, people are going to run for it because after that, it is going to be taxed as deemed dividend. And you will need at least more than an hour to understand the formula they have given, you know, for deemed dividend. But don't bother because nobody is ever going to, you know, go for that deemed dividend provision. Arbitrage funds, they have been saved. It was being widely believed that they could have been hit, but they have been saved. But one good thing they have brought in, and that is an amendment to the definition of the specified mutual fund. Now here they have included the market-linked debentures and bonds, you know, from those from the meaning, for purpose of meaning of the deemed short-term capital gains. The good thing is there were these gold ETFs, fund of funds, etc. They needed to be, taken out and put into the equity basket. So, these international funds now, there you cannot say that they have put in more than 35% in equity. So they have reversed the definition and they have said now instead of looking at 35% of equity for an equity fund or otherwise, you look at if the more than 65% is in debt or money market, we will take it by that definition. It's a smart way of doing it, but it's a welcome provision. FNO. Friends, FNO, obviously the eye of the finance minister would be on FNOs because retail FNOs were really picking up in a big way, and therefore the securities transaction tax has been raised. Option in securities from 0.0625 to 0.1, and futures in securities from 0.0125 to 0.02. So this is what is as far as FNO is concerned. The capital market part is almost done, friends. Quickly, some few rationalization provisions of TDS. I think they are welcome. The TDS rates for a number of, the sections ranging from the payment of insurance commission, life insurance policy, lottery tickets, commission, brokerage, even rent. And then the rent to individuals, HUFs, e-commerce transactions, all these, they have been reduced. For all those in the 5% bracket, they have been scaled down to 2%. What was there in 1%, the e-commerce transactions have come to 0.1. And the mutual fund unit trust repurchase of units, TDS, has been abolished. So I would say these are welcome provisions. For the salaried, what they have done is because salaried taxpayers sometimes they get to have the impact of TCS. Now the question is, in computing their tax liability under 192, when you take the TDS, should you consider the TCS? Because suppose he has made a LRS, to some of his son or daughter. Well, they have brought in a provision that for TCS, they will be eligible to claim credit. In the case of minor, if TCS is paid, if the income is being clubbed in the hands of the parent, that will also be considered. Friends, they have finally spotted something, which is TDS on payment of salary, remuneration, interest, bonus, commission to partners. Because this was one thing which was earlier never within the TDS net. And they say that if it is more than 20,000 in the financial year, now sometimes, I say that what was being done earlier, partners were required to pay actually advance tax, right? You are paying advance tax. Now what are they doing here? By providing TDS, you are paying at the end of the year. You sometimes fret કે ભાઈ આવો વિચાર કોને આવ્યો? તમને વર્ષમાં 4 વાર મળતો તો ટેક્સ, એની જગ્યાએ તમે you have pushed it to the last day because it would always be credited to the account on the last day and then paid in the month to follow. And if you are smart, you would say no, 10% નહીં, અમે 30% ના બ્રેકેટમાં છે, 30% TDS કરી લો. Then for 234C also, you will never come into trap. So I don't know, they have done it, it's fine, but what is it that they are going to gain from this? Friends, TDS on sale of immovable property. Now keep this in mind, until now, if there was a property which was jointly held by co-owners, say a property valued at 1 crore and 60 lakhs, and there were 4 co-owners, 40 lakhs each, and you are buying a property. What do? To each co-owner you are paying less than 50 lakhs, so you are not required to deduct any, they were not required to deduct any TDS, when you are purchasing. Now they say that irrespective of the fact, if the value of the transaction for the property purchase or sale is more than 50 lakhs, it will attract. After so many years, finally they realize this. I think there is nothing wrong in principle, because I remember, as far as these farmers are concerned, sometimes you have farmlands which run into a couple of crores, and then every owner, કારણ કે એમાં રઈબેન, અમથીબેન, ચકીબેન, પેથાભાઈ, શકરાભાઈ, બધા કેટલા લોકો હોય કોર્નર્સ, જેટલા લોકોના નામ 7-12ના ઉતારામાં હોય, everybody would get their share. And you will have a tough time to catch hold of anybody. So finally that is there. Friends, your floating rate savings bonds of the Government of India have also been covered. So they will attract 10%, Section 193 interest from securities. TCS you currently pay if you are buying a car more than 10 lakhs. Now they say, why just a car? Any notified goods. So if there are other, you have home theaters, you have luxury watches, you have many other things. So they will all, once they are notified, if they come into this 10 lakhs plus, then that comes. Friends, when we studied history in school, you all remember Muhammad Taghlaq? What is known about Muhammad Taghlaq? Yatindra bhai? Delhi thi Daulatabad and Daulatabad to Delhi. That has happened this time over again. You'll ask me how? From 1995, from 1st of July 1995 to 31st May 2001, for 6 years, you had what was known as, popularly in those days, the block assessment scheme in cases of search and seizure, avakvera daroda mate, right? And there were sections 158, A, B, C, D, etc. Practically, and then we had later on 2 different kinds of schemes, and finally 2 years ago they said we'll take it into the regular assessments. So the search and seizure assessment, you really get stressed when you have to remember kyare paditi search, kaya scheme te vakhate, which was the scheme of assessment. But anyway, we are going back now to the good old block assessment. You'd ask me, is it good or bad? I would say it's good. The reason being, please understand, it's interesting, of course, not that anybody sitting here is going to be able to really enjoy it, because you don't want to be searched, but there is a lighter part to that as well. I'll come to that later. Under the block assessment, and they are the same sections. If you can keep that in mind, among same sections, 158 AB, and almost the same language also, with some minor cosmetic changes. It rarely happens, but it's like, the ghost of Frankenstein reviving itself after more than 20 years. So the provision is, in substance, if I have to explain, what is the provision? They say 60% will be the tax, flat rate. Suppose 1 crore, 2 crore, 5 crore of unexplained cash, jewelry, assets are found. Okay, pay 60% flat. No interest to be calculated. And if you accept that unexplained income or assets or whatever it is as your income and own it up, and pay tax at the time of filing the return of income, there will be no penalty as well. So only tax at 60%, no interest, no penalty, and you can say that because there is no penalty, there is no prosecution also. So for all practical purposes, somebody said, what is this? This is a continuous voluntary disclosure scheme. When is it opening? It's opening on 1st of September 2024. So if somebody is going to come and visit you, just tell them, bhai, thodik raah jo ne jara. Come after 1st September. And the irony, in fact, to some of my friends from the profession, the irony of this is, and it's really mind-boggling. Suppose take two cases. In one case, something is found, but without a search. It is on the basis of some survey or other investigation, etc. In such a case, you have a section what is known as 115 BBE, 115 BBE. What is the tax there? The tax is 60% and surcharge and cess, and there is a penalty mandatory. All that comes to 84%, and there is interest on it also. So actually in some cases it could go more than 100%. So imagine what's going to happen if you have something with which you are disturbed, कि अब लोड बहु पड़े छे, तो go and knock the doors of the income tax department के साहब आओ ने जरा, I invite you. હું 60% ભરીને છૂટો થઈ જાઉં. Because if I am caught otherwise, I may have to pay more than 100%. I think this has escaped their attention. You cannot continue with 115 BE. In fact, one of the good things of block assessment, though it is criticized, કે ભાઈ તમે આ એક પકડાય તો પેલો કહે ને કે પકડાઈશું તો ભરી દઈશું 60%. But, it's two ways. One is, okay, he is paying it straight away, without any dispute, litigation, take it. At least you have this 60%. They have done another good thing in this. One of the good things in this budget is for curbing litigation and rather bringing an end to those kind of things. They have brought in a welcome provision which says that in the case of appeals by the department, they say the current limits are 50 lakhs in case of an appeal to the tribunal, 1 crore in High Court and 2 crores in Supreme Court. Shortly they will notify it. These were limits from 2019, August 2019. They are going to raise it to 60 lakhs from 50. 1 crore High Court becomes 2 crores. So if in a particular case the tax effect is less than 2 crores, they cannot go to the High Court department. And in Supreme Court it's 5 crores. So that 1 has been raised to 2, 2 has been raised to 5 crores and 50 to 60. Welcome. But at the same time, an equally attractive opportunity is given to the taxpayers. And that, I think, is a provision which I like, because I believe, if they can market it well, it will be a scheme which will really run. The specified date is 22nd July 2024. So any demands which have arisen prior to this date, that is just the day before the budget, and they have classified this in two parts. One is demand as on 31st January 2020 and demands after 31st January 2020. So if it is a demand which has arisen in the last, say, 4.5 years, they say that if you want to, Vivad se Vishwas, you want to get through, just pay the disputed tax, only the tax. no interest, no penalty, no prosecution. And this is if you pay by 31st of December 24. It appears that they want to keep this as an open scheme also thereafter. So they say if you are paying after 1st January, you will pay disputed tax plus 10% of the disputed tax. Well, anybody who really wants, he'll pay disputed tax and get out. It's a welcome provision. The other is, in case the demand is prior to that, then they say disputed tax plus 10%. No interest, no penalty, no prosecution. And if you do it after 1st January, disputed tax and 20%. So I think this is something which if they are able to market well, this will really also reduce the pending litigation that has piled up. Because people would want to buy peace. You know, many a times they fight and go in appeal. Why? Because there are penalties and interest mounting. Interest and penalties, they are killing. And then the danger of prosecution. I think this Vivad se Vishwas is something which will work. They've also brought in a provision that commissioner appeals have been given powers to set aside. Because, you know, in cases where there have been ex parte assessments, now how is a commissioner going to decide? So they say, okay, in appropriate cases you can do that. The provisions in regard to reassessment have also been rationalized. You know, only 3 years ago they raised the time limits to 10 years, 3 years and 10 years. That they have brought it down from 10 to 5. So it is 3 years and 5 years. I think these are also some of the welcome changes. Let me wrap up because time has gone out. Only two last observations that I want to make. One is charitable trusts. I think that can take time on its own. But in substance, it's a welcome provision because they say we are rationalizing this by merging the two regimes, Section 10 regime and Section 1112 regime. I think that's a welcome provision. Those who are connected or concerned with that can take a close look. What I like is on the focus of ease of doing business. They say we don't want to now, you know, irritate you for small things. What used to happen, say your son or daughter has gone abroad and studied, you know, he had opened a small bank account, put some $100, $200, $500, comes back, forgets about that, and it is found a couple of $100 are there. Or sometimes even some more amounts. They brought in that threshold of 5 lakhs up to which they would not bother. Now they have raised it to 20 lakhs. So your Schedule FA, foreign assets, you know, they say, of course, they have also taken care to see that those ESOPs which were given, you know, and said that this is a gift by the company and therefore, you know, the tax, so that loophole has also been plugged. But overall, I would say, barring some of the provisions that need to be ironed out, particularly on capital gains fronts, I think the Finance Minister has done a good job. The focus on the new regime, the tax rates being very rational and, you know, sound, and this ease of doing business, etc., is something. One thing, you know, somebody at the beginning when I was entering in, Mukesh bhai, ajna mateni koi shairi chhe. Because 44 years, there has not been one budget where it goes without a shairi. And I said, well, there is nothing much to criticize about as far as this budget is concerned, except for making a mention about the capital market. And you know, the FM's eye on the market, and not just the FM's eye. Even apno Gujarati je che ne, if Sawanbhai, you must have statistics, Deloitte must be having that. What is the share of Gujaratis in the total capital market? I think it's said close to over 40% of the investors on the Bombay Stock Exchange, they are Gujaratis. એટલે ગુજરાતીને તો હવે તો પેલું કન્ટિન્યુઅસ સ્ટીકર આવી ગયું એટલે સવારની. તો પહેલાં શું છે કે પેજ 2 વાંચે ને જયેન્દ્રભાઈ સવારના તો જ પેટ સાફ થાય. કારણ કે એ વગર એને ચેન ના પડે. અને યુ ગેટ ઓનલી ધોઝ રેટ્સ ઓન પેજ 2, અધરવાઇઝ તો આવે નહીં. હવે તો એવરી મિનિટ. એટલે જેમ પેલું બ્લડ પ્રેશરનું મોનિટર ઉપર નીચે થાય એમ પેલા જેમ ભાવ ઊંચા નીચા જાય એને જો આ બાજુ બ્લડ પ્રેશરનું મોનિટર મૂક્યું હોય તો એ પણ ઉપર નીચે જાય. હા, તો લેટ મી એન્ડ ઇન ધ લાઇટર વેઇન સમથિંગ બિફોર વી ગો ફોર ધીસ લાસ્ટ few minutes of fireside chat. Somebody who is so addicted to the market, કહે છે કે એને આ દુનિયા છોડીને જવાનું હોય ને તારે જીવ નીકળે નહીં. વાય? બિકોઝ વોટ ઇઝ ગોઈંગ ટુ હેપન નેક્સ્ટ. હા, એટલે એક somebody had passed away and that was it. But then it was like એનો આત્મા બોલી ઉઠ્યો. હા, કારણ કે બજારનો એવો રસ્યો હતો. એટલે એણે કહ્યું કે કફન ન ડાલો મેરે ચહેરે પર, મુझे आदत है मुस्कुराने की. कफन न डालो मेरे चेहरे पर, मुझे आदत है मुस्कुराने की. आज की रात न दफनाओ मुझे यारो, कल उम्मीद है मार्केट ऊपर आने की. એટલે આશા અમર છે. હા, માર્કેટ ઉપર આવશે મારું ને પછી જ હું ઉપર જાઉં. Well, friends, that is all about the chills and thrills of the finance bill. Thank you and thank you very much. Thank you.